Hey, everybody. If you're watching online, it looks like we got a little bit of a different setup here. I'm in Dan's normal spot if you're a frequent podcast listener, and he's not here today. We upgraded. We're replacing with Jeff and Heather. So, Jeff, why don't you guys introduce yourselves just for those who may not know who you are and what you do in the company?
Yeah, I'm Jeff Gaston. I'm the Executive Vice President of Sales here at Agent Boost.
I'm Heather Woody. I'm the Director of ACA and Individual Growth.
So, Jeff, what do you generally oversee in the company? That's a fancy title, but what does that actually mean?
Pretty much I oversee all ACA, any of our ancillary products, and life and annuity.
Perfect. And Heather, you work with Jeff on Jeff's team as well?
I do.
Give us a brief history of because you have quite the eclectic experience in the industry.
I do. 15 years ago, I started on the Medicare side as a sales agent with a teledigital call center. Then from there, I worked up into management and worked on the compliance side of things. Came to Dan and Mike 5 years ago almost.
Yeah.
As compliance, and in the last 2 years, I moved over to the sales side with Jeff on the ACA side.
Yeah, and Jeff, just quickly recap you have a lot of eclectic experience as well. So
I got in the industry 10 years ago now. I used to own a company called Rocky Mountain Insurance. We're a brokerage here in Utah, and we mostly service the West Coast, and we did all lines from obviously Medicare was our biggest one, life annuity. We even did P&C, and I came to work for Agent Boost about 3 years ago when I sold.
Yep. So Jeff had been one of the reasons why we picked Jeff up was he was strong where we were a little bit weak when we wanted to grow, and so he's really helped us grow the ACA channels over the past 3 or 4 years, as well as all of our ancillary programs, life. So you're like Dan and I, jack of all trades. Everybody here knows quite a bit. The reason why I wanted to bring these two on is Heather has been traveling to some conventions recently. This year so far, you've been up on the hill with the NABIB, CapCon. You went to, what is the women's one in Vegas? Elevate, okay. Down there, a little bit at Medicarians. And then recently you were at the ICRA. What was the official name of that conference? ICRACon. Yeah. Just put con on the back of whatever it is. I know that world well. I just sold my FearCon. So I sold the last remaining IP for that Halloween and horror convention I used to run. So
I love it.
We'll have to have Insurance Con.
Yeah. Go trademark it fast.
Just kidding. We do have something like that coming. So Heather, why don't you tell us kind of the highlights? ICRA is, I always forget what the official acronyms are. Yeah. What does ICRA stand for? Individual Coverage Health Reimbursement Arrangement. Yeah. Terrible.
It is.
Terrible name. ICRA sounds like a disease.
Yeah. If everything passes.
You got ICRA.
With federal right now, it's going to change to the Choice Act. So it will allow individuals who get their coverage through a group plan to go out to the individual marketplace and choose their plan. So what they've seen over the last 2 years is it's growing rapidly for a couple of reasons. First of all, about 225 million Americans get their coverage through a group. The goal...
Is that a lot?
That is a lot.
You were just telling me an interesting statistic about Utah.
Yeah, Utah is about 60% of Utahns get their coverage through a group plan.
That's the highest in the country?
That's the highest in the country.
Interesting. So go ahead. So
the goal is to take about 10% of those off of group plans and move them to the individual marketplace. And the hope is that it will stabilize the individual marketplace because individual marketplace is seeing slower rate increases than the group coverage. So the main reason why a lot of employers like it is because they can establish an amount, and every year it's a stable amount that they can count on. They call it the 401k of health insurance. So setting it up as a specific amount, and it makes it much easier for their budgetary.
Yeah, and what obviously... For the actual employees, for the beneficiaries, they're able to select plans that are more conducive to what they want. They have more choice and flexibility. And for employers, it works well because you can basically set your reimbursement budget and essentially know, like, per employee how much you're contributing. It's controllable, so it gives a lot of choice, freedom, and flexibility for these plans.
So people usually go from an option of like 1 to 3 plans for an employer up to 70 in the individual marketplace. And the satisfaction rate, they actually just did a study, and about 90% of those who have gone onto ICRA, they've seen a 90% satisfaction rate with their employees with the options.
Yeah, we're always going through that too with our own employees and our own, with our PEO, and what works well with one national coverage in one market in one state isn't necessarily what works and is great for the other employees across the country and the other states. So yeah, I can definitely see how that would play a big part. So before we spend too much time, I don't want to spend a lot of time talking about ICRA, but what were some of the interesting things that you found from that conference, or what were some of the highlights that they were really focused on there?
Some of the highlights, the growth opportunities. So especially those producers who've been traditionally focused on individual plans can focus more on the group market, because there's an individual play there where they can grow their book of business. So it's a strategic play for producers. And then for those who've been traditionally focused on the group market, it's a niche that they can get into and save their group policies, because groups are seeing 20 to 25% increases year over year. And so
our own group.
We were just hit with 22%. Yeah. So yeah, that's insane. And we didn't even have our census, our population didn't even have a lot. Besides your baby,
that didn't even count into it.
Yeah, that wasn't even,
because that was at the end of our opener. In case you're wondering, I had a baby that was in the NICU over 30 days, but it was right when we renewed, and our rate still went up 22%. Yep. So we were very shocked.
Yeah, that was, but without that even hitting on the.
Yeah, so we'd have to see what that would be next year.
Yeah, exactly. Well, so if there is, actually, as we're filming this podcast, there's a lot of consternation and drama surrounding the one big beautiful bill, and you have our two Titans bros kind of fighting it out right now over the increase in spending over that one big beautiful bill. And I think that's a little bit of a ruse, personally, but we'll not spend much time talking about that. If it goes through, part of that one big beautiful bill would be to rebrand Choice and update it, increasing tax credits for small businesses, and essentially codifying it. And codifying it means it's actually built into law. It's part of the actual, law of the land. It would be more permanent.
One of the other things that it does is also allows, so currently the only way that employers can sponsor it is pre-tax dollars. So it's before you get your taxes taken out. So it's also would codify it that employers can put post-tax dollars in. So it would decrease your taxable income that way. Yeah, and there's it'll increase the flexibility for small employers, right? Because right now you can't offer both ICRA and traditional group for small employers, and this would allow that, kind of be an either or, whatever works best, which I think would be a great option. And once that happens, I think it's really going to blow the doors off the sellability and the opportunity for agents. Yeah,
because right now they're using a lot of family glitches, so people haven't been using ICRA. If you don't know what family glitch is, if your cost of your plan for your family is more than 9.2% of your salary, you're allowed to get onto a marketplace plan. And that's where we're seeing a majority of the enrollments rather there than ICRA. But if this goes through in the bill, we're expecting a lot more enrollments with ICRA moving forward.
Yeah, so the reason why I wanted to have these guys on, and the reason why we're talking about ICRA and things like that is, as we all know, there's a lot of chaos, there's a lot of turmoil, there's a lot of upheaval in the insurance industry on the Medicare and ACA side. But my point is, people are always going to need to get some sort of insurance some way. Now, the mechanisms, the costs, the delivery may always be changing, but unless we just, wave a magic wand and go some sort of, national single payer thing where the government does everything, and even if we did that, there would still be some sort of additional insurance coverage needed. Like we were just talking about, there's always going to be opportunity. And so we here at Agent Boost, we're bullish on ICRA and the opportunity there. I think that it's going to add stability to the marketplace, because just having 80% of fully subsidized people on there in the high risk pools and things like that aren't sustainable for the current arrangement. So we're really bullish. So if you're an agent out there that's looking to reinvent yourself, if you're an agent that's looking for, the next horizon, I think you should really invest some time into ICRA or Choice if the big, beautiful bill passes in some way, shape, or form. What do you guys think?
Even if it doesn't pass, it's going to be something that's going to help everybody in the market, both the groups and the individuals.
Yeah, exactly. So moving on, a couple other things we want to talk about. Let's talk about some health Sherpa updates. It seems like in the ACA space, if you're an agent selling ACA, it's like a lot of things. It's a moving target where you got to know, how do I do it this week, this month, today? What you were doing, last week may or may not be working. There's been some recent health Sherpa updates. One I'm aware of is the SEP verification. How does that work?
Mm-hmm. So as of May 16th, if they have loss of employer coverage or loss of credible coverage, they have to be able to prove that they lost that coverage. So whether that's a letter from the employer, a letter from the group plan, there's also a self-attestation mechanism now, because as you're aware, half the time, let's say I lose my job in the middle of June, I'm not going to get that letter till July saying, hey, it's ending. And the coverage can't start until they prove that they have that election period. So that started May 16th. And there is a self-attestation. So a lot of times, employment arrangements sometimes are not always ended on the best of terms, or there's not, the employer or the HR or whoever, maybe there isn't an HR at the small company that you worked with or things like that. So there's a self-attestation. Has that been working? Has that been... It's been working pretty well. It's just a matter of knowing how to find it and get it. If you need help with that, I can certainly provide it. So just reach out.
But CMS is also watching. If you're using a lot of those,
yes,
you will get flagged under your NPN, because the reason why they're now requiring proof on loss of health coverage is that was the number one SEP used for fraudulent enrollments with ACA. So they're watching to see what you do. So make sure if you're going to use that it's 100% legit, because you don't want your NPN to be flagged just because your client might be a little bit shady. You really want to look into that.
Yeah, what other SEPs are still working for agents to be processing business this time of year with ACA?
So right now, the 150% of federal poverty level is still available.
Mm-hmm. Which we'd heard that was going to be going away, but we got a stay of execution on that. So
yeah, if they've lost Medicaid, they can also use that. Marriage, divorce,
moved,
birth of a baby.
Works.
So. Long story short, we're still doing a lot of ACA business. There's still
all
a lot
the
of
SCPs
people,
are working, and none of them are being verified right now except for loss of health coverage.
Yep.
Yeah, I mean, that one, you're basically just lying if you're using that and they didn't lose it, but that happens very often, right? That's one of the drawbacks to writing a lot of ACA businesses. People are generally in flux a lot of times. They're in between employment. They're getting another job. They're in and off of it. So that's also a highly utilized, valid SEP. Let's talk about all the people, with the current Medicaid unwinding. It's estimated that there's up to 2.4 million people that are going to be wound down off of the Medicaid rolls as things get a little bit more scrutinized. Where are those people looking to land?
So a lot of the carriers who offer Medicaid and ACA plans, they're hoping that they realign with them just with names, but they have to be careful, because when you get those names and lists put out, they can't just go directly contact them. So that's one of the big issues that right now in the industry is, how are they going to make contact with these people? Because people who are on Medicaid are some of the most difficult to get actually a hold of. A lot of them don't have working phone numbers. Some of them don't even have stable homes or addresses. Yeah.
You don't say.
So that's going to be one of the big issues, and I think a lot of the carriers are trying to figure out ways to work with CMS to figure out, hey, how are we going to give these guys an option to enroll into a health insurance plan?
Yeah. A lot of them are around that 150% of federal poverty anyway, so they're going to go on to
subsidized ACA
subsidized
plans.
ACA, usually 94% subsidized, so they're probably going to pay very, very little, and their max out of pocket might be as small as $2,000, which I don't know about you, but I'd like a $2,000 max out of pocket.
Never had that before. Yeah, that's for sure. Yeah. So again, opportunities, right? There's as these states unwind some of the Medicaid, basically we've been overly generous or haven't, or the thresholds for Medicaid have been very, very high, meaning a lot of people qualifying for Medicaid. Yep. And as the states are looking to save some money, some of those people are going to get kicked over to the ACA. So again, so if I'm a enterprising agent and I'm thinking, how can I write more good, legitimate, sticky, long-term ACA business? I'm going, how do I work with these carriers or these Medicaid or people who are on Medicaid, and help a lot of those people transition onto those ACA plans? Because whether they end up having to pay some sort of small premium or not in the future, those are going to be those margin business where they don't quite qualify for Medicaid. And frankly, those are the types of people who should get subsidized ACA plans, not everybody who just attests that their income is low.
Right.
Right. Exactly.
Along similar lines to that Medicaid verification, Health Sherpa is rolling out a change so that it pre-verifies if somebody is currently on Medicaid, so that you don't enroll somebody who has no idea that they're on Medicaid and then they have to pay full premium. So
I think this is breaking news, right?
Yeah.
So this is a Health Sherpa upgrade or update to the platform. Do we know if it's going to be for all states, FFM states? How is that going to work?
Any of them that Health Sherpa services.
Yeah,
so they service Georgia, and all the FFM states right now, and then they're potentially adding more state-based exchange, but it'll only be the ones that Health Sherpa actually services.
Because as we know very well, not all states' Medicaid are equal, right? Not all of their systems and reporting and eligibility and verification is equal. There is not one master platform that does that well, a la Change, that used to kind of be able to do it, but it's never quite been the same from the hack. So it's interesting to me how Health Sherpa is going to do that and how they're executing on that. But that'll be a huge update, and that'll be a big value and a big time saving. So if you're an agent and you start entering it and they're on Medicaid, you're going to know right away.
Yep. It'll let you continue through the application, but at least you know ahead of time that, hey, these people have Medicaid, so you can alert your consumer so that they don't get a surprise bill in the mail.
Because that was one of the issues, when tax season came around. Dr. Oz, in his opening press conference, says that 250,000 people are enrolled on ACA plans that had no idea they even had the plan. And that was just what they knew at that point. They believe there's obviously a lot more, and it's just become an absolute mess for people. And that's one of the reasons why now you're starting to notice those notifications in Health Sherpa that, hey, your client hasn't filed taxes, and they haven't done it in the last 2 years. Well, it's going to be cut down to you have to do it every year, or you're not going to be eligible for any subsidies.
So people have to, what you're saying is people have to file their taxes. Mm-hmm. Are there a lot of people that don't file their taxes?
A ton.
There's a lot. Yeah, there's a lot, especially when you get into those lower income thresholds and those people that are qualifying for the 150% FPL level. So that'll make things a little bit challenging as well. So let's talk for a minute about the 250,000 people that are on plans that didn't know, right? And those type of things we've belabored the point on the podcast over the past almost 2 years now about people doing fraudulent activities on the ACA. But again, it's a bad system that's allowed that for it to happen, right? Like, who would think, what other industry would allow people to be signed up and essentially pay an organization, an agent, a fraudulent company for these enrollments when the consumer didn't even know, right? Yeah. And we're hearing all the time about lawsuits and the DOJ's really cracking down on some of these agencies and entities that we're hearing about that were going to, homeless camps and giving people cash for their information or just enrolling people without having any idea. They were buying mortgage protection leads and just, searching the marketplace and going, oh, well, now you're on Ambetter. Now you're on this plan. Surprise. Yeah. You've got insurance now. And one of the things that I think a lot of these entities didn't realize is eventually that's going to be found out. And eventually you can easily track down who was doing that. Yeah. Like if you're an agent or agency or somebody that's doing that, your days are for sure numbered if you're not already caught, not already popped on that kind of stuff. And that stuff really frustrates all of us that are trying to do it in a good way, because we've been, victimized to the extreme on the ACA side from other entities that are doing things the wrong way. And really we're just seeing this fixing and this correcting of all these bad practices over the past 4 or 5 and longer years. So along with that, we've been really making some inroads with CMS and reaching out. Do you want to fill us in on I never thought we'd really be the ones that are advocating to get involved with CMS and raising your hand and say hey, we want to do this. We want to participate in this. But, I think that it's really important because in order to protect the long-term viability and stability of the industry and integrity, and in order for us to be able to serve the consumers and also be compensated for doing a good job, we have to root out the bad actors and these really bad practices in the industry. And so we decided, we're going to be much more involved in working with regulators. So where are we at with our current?
So at the end of this month, Jeff and I are going to Washington, D.C. to the face-to-face meeting, agent broker meeting. So that means we'll be meeting people like Peter Nelson, like Mehmet Oz, who are, heads of the departments, and be able to discuss with them some of these problems that we're having and our agents are having, so that we can give some suggestions for making it better.
Yeah.
We're also meeting with a bunch of senators on one-on-ones. Every time we've reached out to an office, and this is both sides of the aisle that we're going and meeting with, they're very open to meeting with us because I think lawmakers, too, they want to know more about this because I think a lot of them have just been kind of kept in the dark and they've just heard, hey, everything's running great, and they kind of want to hear from brokers going, hey, these are the issues that we're seeing so that they can try and make the stuff in the bill that's going to be the right way. So we plan on meeting with a handful of them. We've got multiple meetings already scheduled.
Yeah, we're all also participating on monthly calls and Zooms, and we got approval. So it's been nice to, raise our hand and say, hey, we'd like to participate in some of this stuff and advocate really for the industry. Because if you'd have asked me a couple of years ago, I would have said, I have no desire to go do that kind of extra free work and pain in the butt to raise your hand and try to participate in that. Jeff, you've always been much more willing to be involved in government and politics and stuff like that. But this is new for us, but we feel like it's really important. So
yeah, it is.
What else do we have on the horizon of events coming up that we're going to be participating in and advocating for?
I think the change of open enrollment's huge too. They're cutting down. So people who aren't aware right now, ACA open enrollment started November 1st, and the first half of it would be cut off December 15th. After December 15th, anything that you would write would be a 2/1 effective date rather than a 1/1. Well, in the proposed rule, it would just be November 1st to December 15th. So people are losing almost 45 days of being able to enroll. They're estimating that could affect about 750,000 people just on ACA being able to get enrolled, because right now brokers are in the middle of AEP for Medicare that starts October 15th that runs through December 7th. It's really hard because most brokers write ACA and Medicare. There's a small percentage of just ACA people, but a majority of ACA writers, their main business is Medicare. And what we're going to lobby, and I know a lot of big organizations is we've got to extend the open enrollment period, especially if we're going to change the SEPs so that people can get enrolled in the right plan. Because a big difference between Medicare and ACA plans can drastically change from one year to another, and the cost can be
big difference.
Big difference. So if you're not re-enrolled or in one of the proposed rules, if you're not touched or enrolled, you won't just be automatically enrolled this coming year. So there's got to be some type of a give on this, because there just won't be enough time for all the brokers to help enroll people.
Yeah, I think any of us that have ever done an annual enrollment or an open enrollment and you have a book of business, nobody ever says, wow, that's way too much time. I wish this enrollment period was shorter, and especially this upcoming year where we already know there's so much turmoil, so much change, so much chaos. The second largest, I believe Aetna was maybe the third largest ACA provider in the country, is completely exiting the market. We have just right there's 1.1 million members that need to be served. And you're trying to tell me that we've now got to do that in 6 weeks. And like Jeff said, most agents are, if you're a good agent, you're doing Medicare and ACA, and you have both of those critical enrollment periods, open enrollment periods, where you're having to either pick which clients you're serving, or maybe you're just spending your whole time just re-enrolling your current book and you have no ability to grow. And so it makes it extremely frustrating for these agents. And the way that the industry's been over the past couple of years, like Jeff said, it's not vanilla. No. There's a lot of catastrophic, major changes, upheaval every year. And so agents need to be more fully engaged, and we need more time to be able to process both. And I think it's just a bad idea in general to have the Medicare and the ACA open enrollment periods overlap, because the way you market, the clientele, the marketing regs, everything is just different. And you're basically forcing the best brokers to have to split their time or sacrifice serving those other consumers.
One of the other things with Aetna going out of market, those people, if they continue on the marketplace, they're just crosswalked to a similar, I use air quotes, similar plan, meaning it's going to be similar in their benefits and similar in the value of the plan.
But not network.
But not necessarily network or prescription coverage or things like that. So it's going to take a really savvy broker to make sure that those people have the right plan as they're moving to a new carrier.
What are you hearing from Aetna and the crosswalk process?
Well, Aetna doesn't have much to do with it once they're out into it. CMS is actually going to be the one that will pick the plan that it'll move over to. We've seen this happen in Utah here before with the plan, and the plan that got crosswalked was one that none of us expected it to be. So there's going to be some crazy things going on, and it's going to be area. It's not like it's just going to be the whole state. It's going to be crosswalked into one plan. So it's not going to be a smooth process for a broker where they're like, oh, all my plans went from Aetna over to United Healthcare. It's going to be individual areas that are going to be crosswalked into different plans. So it's going to take brokers a lot of work. Like, for example, for us, we were one of Aetna's biggest GA partners in the country. We have tens of thousands of members that we have to make contact with and get moved over. And it's going to be very difficult if the open enrollment's cut down.
Yeah, again, the only way I think that we're going to be semi-effective of that, and, not all hope is lost, is we have really great tools, tech, and a plan and a strategy to handle big movements and things like that. So, again, just a plug for who you're working with. One of the reasons why we've been growing so much on the ACA side even is we do have those kind of tools and technology and strategies. So when you have agents that have major blocks of business going, we can help build workflows and automations that eliminate a lot of that work and are able to cut through and reach out to people and cut down on a lot of that busy work. So
a couple of things Health Sherpa is working on as well. They're working on having at-risk flags. So those people that are being crosswalked to another plan, you'll have those people in your renewal dashboard. And then they're also working on side-by-side comparisons so you can quickly review. If you've ever worked in the ACA marketplace, the plan might have a similar name, but the benefits could be drastically different. And so they'll have a side-by-side comparison of the plan that they're currently on and the plan that they're being crosswalked to, so you can quickly compare.
Perfect. Well, what other
subsidies ending at the end of the year?
Yep, that's the other thing that's been top of mind. And Jeff and I were talking before the podcast, and we were just saying we're already mid-June. I mean, realistically, it's the first week of June, and we still have no idea if these subsidies are going to be extended. And it's not specifically addressed in the one big beautiful bill, is it?
No.
Resolved. And the way that it's shaping up right now is that doesn't seem like it's coming to a timely resolution in the near future. And then you still have this ticking time bomb of the subsidies being expired. And, depending on whose numbers you listen to, that's going to affect between 7 and 11 million people Americans, if those subsidies expire. And so, that could definitely pose an additional, really large burden on a compressed time frame. It's like, do you see what's going to happen here? You have like maybe all of these millions of people that need to be changed in addition to all this other chaos, and you're saying it all needs to be done in a shorter time frame, that doesn't make any sense.
Yeah.
So again, all notes for our discussions when we're meeting with CMS and we're meeting with these regulators, because even if they extend them, there's still messaging that needs to happen, and there's a lot of uncertainty with the carriers. And if you're one of the carriers right now and you're going through bids, you are just like, it's like pin the tail on the donkey game, you know, where you're like 10 blindfolds on and you're spinned all around and you're like, and go make your bids and build your plans right now and guess what's going to happen.
It was really interesting when I met with, because there were some, high level people at the ICRA conference that I talked to them, and they said, depending on the state, they're having to file up to 7 or 8 different options. So if subsidy stays, if subsidy goes away, if all the different options. So they're having to file 7 different
And if I
bids.
remember right, some states aren't letting them file multiple sets of plans, right? If I someone fact check me.
State base.
On that, where it's like, nope, you got to have one set of plans and you got to stick with whatever you decided. So that's going to be insane.
A national carrier who's working in 30 states, that's got to be arduous on their side.
That's one of the issues why you don't have a lot of carriers expanding states this year. We know of some major carriers that are moving around into multiple states in 27, but there's a lot of carriers that aren't looking at making an expansion into multiple states in 26 because of the subsidy issue. And that just hurts the consumer not having more options for health insurance plans. So it's really just hurting the consumer in the end.
Well, we all know, and we talk, seems like every week on the podcast, of a lot of the challenges. What are we seeing some of our agents and agencies having success? Or because, I feel like a lot of times we talk this doom and gloom and like all this chaos and problems, and then we're like, well, we're actually double our numbers this year over last year, So what are some things that agents and agencies could be doing to shore up their ACA business, to prepare to continue to grow?
What we're telling our brokers to do is make contact with your clients right now. Don't wait. Don't take the summer off. Use our technology, use our tools to reach out to your brokers. Let them know what's going to happen at the end of the year and say, hey, we've really got to jump onto this in probably September and get all your stuff dialed in so that you're taking care of it at the end of the year, and just communicate with your clients. Don't just touch them one time a year. You need to make multiple touch points throughout the year.
Perfect.
Notifying your consumers early so that they're not surprised that it's happening. If they're at or around that 150% of federal poverty and they're on Aetna, move them now.
Yeah.
Get them moving. If everything passes in the big, beautiful bill, as long as you touch them between August 1st and the end of the year, you're going to be okay. So get your people in the getting used to talking to you around the August through November range, so that you at least touch them, so that if they make changes on their application, then their policy will renew in December. Make it much easier for you at open enrollment time.
Yeah, another thing that I think we've been hitting hard while people are reaching out is we've been reaching out, offering some of these other ancillary programs and plans that we have. We've been having a lot of success. I think if you're an agent and there's chaos, use it for your opportunity always, right? When you're reaching out to a touch point, hey, as you know, there's changes going on. I wanted to just get a chance to, review your coverage. Some of my clients have really benefited from these plan enhancers or these advantage guards or these dental vision hearing plans. And we're seeing a major uptick. In fact, I think in May, we had our best month ever for ancillary sales, which is huge. Yeah. So we're definitely, my point is, there's always going to be changes with the industry, but there's always going to be an equal opportunity, right? It's what's that, equal and opposite reaction.
And the ancillary carriers are working on alternative products if this all goes bad.
Correct.
We've been in talks with them. They've all got some really good ideas from what they've shared with us.
Yeah, I mean, doomsday scenarios, right, where people are like, oh, there's going to be up to 11 million people kicked off the ACA. I'm like, great. What are we going to sell all those people?
Yeah.
Because they're going to need something, and if they don't qualify, go figure, you may not always qualify for some sort of subsidy up to 400% of federal poverty level. you might be able to afford a short-term insurance plan or something else, right? We've all had to actually pay for insurance before.
Yeah. The short-term plans too. There was a stay on the court legislation for the 4-month legislation. They asked for 6 months. Ended up that they said, "Hey, we'll give you 90 days."
Yep.
So we should know by the end of the summer what's going on with those.
Yeah, that's been an interesting one. The administration's definitely signaling that I think what they're trying to do is thread the needle where they're able to bring back legitimate short-term plans with good networks that are not the crappy junk PPO ghost insurance,
right,
with like
an indemnity plan where
exactly,
they only pay a certain amount.
Or you're paying for this nationwide PPO access that people think is insurance, and it's really nothing, right? It's garbage. And we get hit up with the opportunity to represent those types of plans all the time. I bet probably once a day I have to bat away one of those,
spam
junk
insurance,
insurance carriers, But I do think that there's going to be a massive opportunity again, no matter how things change, whether that's to re-enroll those books, to have some solidification. And then I do think that after we get through this really crazy, tumultuous time, there's going to be some stabilization and healthy protocols going forward.
Well, and some of the bad actors who've been doing things like you were saying, bad business, they're going to get weeded out because the money is not going to be there as much because they're not going to be able to buy a mortgage protection list and just keep enrolling them.
And there might not be any free plans. Every plan might at least cost $1 or a couple bucks, where you're going to have to actually
pay a premium.
Put a premium in. And when that happens, you gotta know who it is. And then we've heard some of these bad actors on some of their little chat rooms talk, well, I'll just pay for that. Well, guess what? We talked to the president of one of the companies, and he said, oh, we would flag that so quick, knowing that is the same credit card or same bank account that's paying for multiple policies. So I do think these changes will get rid of a lot of the fraud.
Somebody will find a way to try to game the system. And it's like, man, you guys work really hard when you could just do it the right way and
make good money,
sleep well at night and really serve your consumers, because I don't know why you got to work so hard to try to game the system and then worry about if you're going to get thrown in prison.
Yep.
You can do it, serve these clients. It's a really enjoyable industry, and you can still have a lucrative business by doing it the right way.
100%. If they put that much effort into doing it the right way, they'd be probably more successful than anyone for how much work they do to do it the wrong way. It's like, if you just did it the right way, it'd be 100 times easier.
A lot better.
Yeah, we're always looking at people's practices and business model, and I'm like, dude, that seems like a lot of work for a very little amount of money, and you're actually not building anything that's worth something long term. It's just sand through the hands,
Right.
So I think that's, an important message. And as you guys go meet with CMS and with our legislators and things like that, and as we get on these calls and things, I think that's the message that agents are starting to slowly get out. And it does seem like the efforts of NABIB and HAFA and all these other advocacy groups and agents speaking up and going like, actually, most of us are very good and care and do a good job. It's not this, 50% of agents are fraudsters and they're all just trying to scam people. It's a very, very, very small handful of percentages of people that have been using tech and exploiting the system at scale. And already those people are running for the hills. I'm seeing it out in the industry right now, and not just the ones that are just flat out fraudulent agents and agencies, but I'm seeing agents that are just not good quality, right? Like on the Medicare side of things too, any of these people that just wanted a quick enrollment, I just want to make money by taking a bunch of inbound calls and looking at my benefits on a screen and processing enrollment. Those people are getting washed out of the industry in large right now. And what's fascinating to me is, yes, there's been a big crackdown of like fraud in the government and lawsuits from the DOJ that are really scaring big entities and things like that. But the low acumen agent, or the agent that's not adding any value to the ecosystem, they've just ran out of opportunities to go take advantage of the system, right? And I'm seeing them just fleeing the industry en masse right now. And I think that's good.
I think it's good as well.
When Dr. Oz talked in his confirmation hearing about there's probably too many brokers in the system, I'm like, there definitely are. Do we really need millions and millions of people to all just try to hungry hippo each other's business? No, we do not. So yeah, what else? Anything else you guys want to cover, or that you think agents are doing well? Opportunities for the future with ACA, threats.
I think carriers, they're investing a lot into private plans. So right now when you're in Health Sherpa, you'll see the little tab where it's off exchange, on exchange tab. Carriers have made it public that they're highly investing into it. They're trying to get them in all states. And that also ties into ICRA a little bit too, is they know it'll be easier if you're not on the exchange and you're on the off exchange plan, and tying that in with ICRA. So I think the bigger companies, they're highly invested into it. United Healthcare, Oscar, and Better, they've all told us what they're working on right now. And I think we'll see that probably this fall.
The off exchange also gives them more flexibility on effective dates, more flexibility on SEPs, those kinds of things.
You mean how it used to be?
Yeah.
Pre-ACA.
Yeah.
Yeah. I mean, I had a private plan through Blue Cross years ago. I paid this was back in my day, I paid $300 a month for it. It was a reasonable premium. My whole family was covered. I had good 80-20 insurance, and that seemed to work well for me, so those days are long dead and gone and buried, and something similar would be probably $1,800 a month now.
Yeah. And I think one of the other things that carriers are doing, you look at WellPoint, who is kind of new to ACA coming in. You look right in their name. Their plan names are probably the longest ones in history. But they tell you everything that's in the plan because it's got dental added into it. I think you're going to see a lot more dental and things added into plans. But one of the reasons we're so big on Ancillary is consumers are really wanting dental right now. There's a big push with stuff that's going on in news and different things like that. So if the ACA plan doesn't have it in there, you really need to look at adding dental as some of these ancillary products. And when you add an ancillary product onto an ACA plan or a Medicare plan or whatever plan you decide to add it to, your clients stay with you about 94% of the time.
Yeah. The other ones that we're seeing big growth on is the indemnity policies, because as the premiums continue to increase and people decide to go on a bronze plan instead of a silver or gold, their max out of pocket's going to be bigger.
Yeah.
And so they want something to help cover that. And so if you attach a dental and a vision and then a hospital indemnity, like Jeff said, it makes it
it's a very
super
similar
sticky.
strategy on the Medicare side of things when you pair an indemnity or something like that with like a Part B buyback or something like that, and you basically leverage the savings to fund the plan. There's a lot of strategies that we've always been doing on the Medicare side of things with that as well. So I think those things are going to come back, right? As we all know, everything's expensive, funding pressure all around. Everyone's going through this evolution right now, trying to make the industry and the finances of everything healthier. And we'll see. I thought that it would maybe not be quite so slow and painful, but it always takes longer and is always more painful than you think it is.
Yeah.
So any final thoughts, guys?
Expect big increases coming next year. There's a 7% increase this year on plans. They had a record number of enrollments. We think in 26, no matter what happens in any of these bills, it's going to be extremely
big
high.
Increases.
Yeah.
Same thing on PDPs, MAPDs. We're going to see premiums coming back. We're going to see premiums on standalone going higher.
Yeah.
Costs are going to increase.
Yep.
Buckle up and get ready for 2026 because it's going to be a hell of a ride.
Good agents needed, right?
Absolutely.
If you want any help with your ACA business, let us know. These guys are awesome. They'll help you, be available. Their teams are very responsive and help you with whatever you need on the ACA side of things. That's all we got for you guys this week.
Yep.
Thanks.